Welcome to Share Views. It's a Syndicate Room special. Syndicate Room is an online investment platform. So far, they have raised £60 million. They were founded 3 years ago, and in the recent past have been in the limelight as far as the success of their platform. They've won the Best Crowdfunding Platform at the Shares Magazine Awards, Best Investment Platform and an Industry Game Changer at the Growth Investor Awards, and were nominated as FinTech Company of the Year at the City AM Awards. So, I mean, it's a relatively new company. It's gone well so far. Yeah. You prove that crowdfunding is not just a here today, gone tomorrow type of thing. So now it's a matter of consolidating and coming of age, I suppose.
You're absolutely right. I mean, the thing that we've seen on the platform is the deals are starting to get bigger, the investors are starting to get bigger as well, and we're getting into these rounds that are not just your first and second round of fundraising, but third, fourth, Series A, and even IPOs and share placements online.
So does that mean you're muscling in on the good work of our friends, the stockbrokers, or is this a different type of thing?
Complementary is how we approach it.
Yeah, no, I think we're complementary, and I think to Tom's point earlier, what we've managed to do is, I guess, corral a bunch of individuals who provide significant, risk capital to early stage businesses, and that's what we've tried to take into the public markets as well. And we launched that a year ago, and as Tom said earlier today, we launched the watch list, which is a whole new offering for us, and we think it's really exciting and connects early stage businesses with this, I guess, pot of risk capital which we've managed to pull together.
Right. Just before we get onto the watch list, which is it is exciting. It's something I've waited for myself for nearly 30 years, so it's that exciting. It's what I wanted to be in the market when I first got into trading stocks. But what would you say the USP of the Syndicate Room is, and how are you different to other crowdfunders? Because I think that is quite important.
Yeah, so every one of the opportunities that goes on our platform has what we call a lead investor or lead investment, whether it be business angel, VC, fund manager, or other professional. They're looking for companies, they find something they like, they do their due diligence, they negotiate the valuation and the terms of the round, and they commit to the round, putting their own money into it before they bring it to us, and then we open it to our members who get to invest alongside. So
somebody else who's been around the block a few times, has skin in the game. It's not just you taking a punt on some weird and wonderful adventure, you the little guy. There's somebody there who's actually, let's say, knows what they're doing and has a track record.
Yeah, they know what they're doing, and more importantly, after the round, they stick around. They're generally going to take a position on the board as either involved or as an observer. So once all that investment goes through, it's not just the entrepreneurs being left to their own devices. There's someone there kind of guiding them through
that. A mentor figure as well.
Yeah.
So that is quite unique in terms of your company versus the rest, if there are any others out there.
Yeah, it is unique to us. All the rounds have that lead. So.
Right, and the other thing, which the watch list, which is your new product, this, I mean, I think from, as I was mentioning before, I started trading shares in the mid-late 80s, and then you always felt that it was, as a private investor, it was them and us, the big wigs in the city, and then the little people trying to get in, and all the good stuff went to the big boys and girls. This is an attempt to level the playing field. Can you describe what it is?
Yeah, so the watch list is a new way to approach share placements. And like you said, the institutions muscle in. And you look at last year, I think it was something like over 80% of public market raises didn't have a retail tranche in it, which is just amazing. So we wanted to change that. And instead of kind of waiting for us to get a chance to get into these IPOs and placements, we're creating the market for them with the watch list. So what we do is we work with who we call watchers, professionals who invest in mostly the AIM market, people like Charles Breeze, Fundamental Asset Management, and a few others. They spot these opportunities for small cap, high growth companies that could use a bit of extra capital to scale up. They bring the idea to us, we put it on our watch list, and then our members get to express interest in a potential placement. So there's no deal arranged to start, but they express interest in, if there is a deal, we want to get involved kind of way. They put a down payment on it, and then if we get enough interest from all of our members, we then approach the company and say, look, we've got $1 million of interest. Do you want to take it? Do you want to do a placement? Let's talk. And hopefully we then arrange a deal, take it back to our members, and they get to complete the transaction.
So people pledge first, and it's a sort of toe in the water thing, and then if there is the momentum is gained or gathered, then you take it forward.
Correct.
Yeah, because it became pretty obvious to us when we started doing placings and public market transactions, that the smaller cap market found it actually quite difficult to raise financing. And paradoxically, sometimes it's harder to raise £1 million than it is to raise £100 million, because the number of funds that actually play in that space just isn't there. And as Tom said earlier, the majority of capital markets transactions still don't have a retail tranche, and particularly in this micro cap space, retail and high net worths can make a really significant difference. And if you can corral that in a sensible way, you can actually help these companies when they come to capital raises by de-risking it and giving them certainty of funding, and that's what I think we're trying to do here.
So in a way, everyone's winning, because even the institutions still have liquidity in the stocks that they're owning, or there'll be more liquidity in the stocks that they're already in. Is that correct?
No, I think that's right, and I think increasingly people are realising, the city is realising, particularly in the micro cap space, that liquidity is essential. And as any investor in AIM knows, liquidity is very variable from top to bottom. You have the very high end where you've got liquidity as there is in the main market, and then at the micro cap end you can have no trading for potentially days on end, and that is because maybe just 3 or 4 large investors own that stock, and I don't think that's particularly healthy.
So on that basis, you've got a very big new playing field to operate in. I mean, it's like a relatively barren desert, and it could actually it could take off. It could gather momentum in the way that it hasn't had for 20 or 30 years. I mean, the liquidity has gone out of the small cap area, hasn't it, as a whole? Yeah,
liquidity's gone out, and there's a number of reasons for that. Obviously, one is the research is increasingly scant in that area, and I think a lot of these companies just find it quite difficult to raise their profile. And IPOs used to be this big event where you'd get a public offering where you'd generate interest and you'd get increased membership and you'd bring in all your stakeholders, and that's essentially what we've done on our platform, is help companies use a capital raise as a profile raising exercise as well, and hopefully we can start bringing that back into the public markets as well and engage retail investors into public market investing.
But you've now got the full cycle. I mean, you start off as a company which is just basically an idea. You start from the crowdfunding thing, and then once they've grown up and they've gone onto the AIM market or the main market, you're there again. So there's no escape.
I guess that's
the full cycle. It's a full cycle thing now.
Yeah, and for both company and investors, that's also a USP, if you will. So they can raise their first round and all the way up to their last round and beyond, if you will, through us. And that's the service that we offer to them.
And just for people who don't know, what's the in terms of investment amount? What are we talking about? Do you have to be a millionaire or high net worth? And what is the entry level on this?
So on the watch list, the minimum interest is £5,000. On the private side of stuff that we do, on the angel funding side, it's £1,000.
Right. So it's not an arm and a leg.
No.
But it is also for people who want to. I mean, people who did want to put in hundreds of thousands or $1 million. It's all fully catered for. Let's say.
Absolutely.
Yeah, we have a few family offices that invest through the platform. So.
Right. So it's across the board.
Yeah.
Right. I mentioned I saw you in May of this year at an event. I think it was at the Mermaid Theatre, and it was quite a lot of bigwigs speaking as well. It was a decent event. I don't normally go out to these things, so it was a special occasion.
Feel honored.
There is another one coming up at the end of this month. Could you tell us about that?
Yeah, it's Thursday, November 24th. It's going to be at the Mermaid Theatre again. Doors are going to open at 6 o'clock, and the headline speaker is Jim Mellon. Most of you should know who he is. You need to come to the website to sign up for the event. You'll have to register to reserve a seat. And I think there's only about 50 tickets left, so they're going quick.
Right, so you may or may not have a place for me there.
We might be able to put one aside.
Right, okay, so this year, just to finish off, this year has been a rather, let's say, turbulent one, full of the odd surprise here and there, Brexit, Trump, etc. How has that affected business? Is it providing opportunities? Has it put people off? Has it put people on? What's the landscape, and what do you think about the outlook for next year?
Yeah, being blunt, after Brexit, I think all the markets saw a bit of a slowdown, but come August time, things pick back up, and we're on track to hit our year numbers. So the appetite for investing in these businesses that we deal with is still high, and I think in the next year, especially as we're approaching tax season, it'll continue to increase.
Okay. Well, thank you to Tom Britton and Tom Hinton from Syndicate Room. Hopefully we'll see how you progress over the coming few months.
Cheers, Zach.
Thank you very much.
That's it for this edition of Share Views.